Hello, my name is Carlos Urban, and today I hope to teach you the basics of buying stocks and the different options that you have when you buy a stock. So if it's market order, the different types of order, limit order, stop limit, and trailing stop order. And I'm actually going to buy a stock and show you what I usually do, before I buy a stock, the type of research and so on. So first, I'm going to walk you real quick through the, sorry. So I'm going to walk you real quick through the app in case you're using it for the first time. So if you want to find a stock, you click on so hold on a second. So you let me go all the way to the home page. So the home page has how much you're investing, your current stocks or cryptocurrencies, and then if you want to invest in a particular stock, you can either click on the sorry that disappears here. I'm gonna have to. So you can click on this glass, the magnifying glass, right? And if you know the name of the company and you don't know the symbol, you can just start writing out the name and it will find it for you. So I'm looking for Procter and Gamble. So here it is, PG. Okay. So let's look at some of the information first before we decide what type of order we want to place. First of all, the important thing that we can see here is that it closed at 128.11. So that's the price that it closed in the after hours. So during the day, which is from 9:30 to 4, it declined $2.15. So that's 1.165%. And then in the after hours, so that's 4:30, I believe, until 6 or 6:30, it kept declining. So basically, this is a stock that is in a downward trend, right? And if here you can see like the candlesticks. Oh, sorry. So here we can see like you can see that all of these contracts, they close lower than what they open. So you can see every time. So this is, and here you basically, so there were only 2 more attempts and it kept going closer. So basically, for me, it's easier to look at it in a line graph. So you can see that it had a big drop and then up and down, up and down, up and down, and then eventually dropped. Okay, I'm not an expert on technical trends and all that, but clearly, it's a declining trend. So let's look at some more information. So it opened at 130. The high was 130.29. Then it dropped to 128. That was the low, okay? And as we saw before, it closed at 128. So it closed very, very close to the low, right? This is the volume. This is the valuation of the of P&G. So if you multiply the number of shares times the price per share, you get this number. This is your 52-week high, 52-week low. Then you have your PE ratio, which is price per earnings ratio. So the share price divided by the earnings per share. So this gives you an idea. You can do several things with the PE ratio. So one of the things you can do is you can compare to other companies that are similar to see the PE ratio if it's below or too high. The other thing is, for example, if you have a company that has a very high PE ratio, it means it's still growing a lot because the price is based on the future cash flow or future earnings. So this is just shows that P&G is around the same as the S&P 500, very similar type of PE ratio. The dividend yield, so this is a company that pays dividend, 2.39, that's pretty good. So, if you just keep the stock, you're gonna get a dividend of 2.39 per share. Analyst ratings, this is very important. So 62.3%, so almost 2/3 think that this stock is a buy, 33.3 hold, and only 4.2 think it's a sell. The people who think, this is kind of like a representative, not necessarily what they'll say, even though it has sought to bolster its sales trajectory, firm hasn't pursued this agenda at any cost. Rather, it has astutely balanced driving profitable top-line improvement. In the past, efforts to clean up the core business for unprofitable sales, such as the modified bathroom. So basically, they say, look, it's doing the right things, it's improving profits, it's growing the top line. So, so that's what the bulls say. Now, the bears, they basically think that the disruption to travel retail from lockdown has plagued P&G beauty segment. So P&G has several businesses. The beauty segment has been affected by the lockdown. Grooming, obviously, so this is shaving. They own Gillette. So, if you're at home all the time, you don't need to shave as much. And then it has the risk of foreign exchange volatility. Because a big percentage of P&G sales is international. What else do we have here? So there is a research report, but you have to pay for it. Then you have, this is very interesting. So this is the actual earnings per share, okay? And this is the expected. Now, I don't know if this is a mistake, but, oh, sorry. The fiscal year starts in July, okay? So this is not on a calendar year situation. So this right here is actually the January, sorry, not the January, the October, this is quarter 4 in terms of December. So quarter 4, they, their actual earnings per share was higher than expected. I think what's interesting is to compare versus a year ago, it's higher. So it was having organic growth. Now, yet to see what happens in Q3 and Q4, but obviously Q3 and Q4 of 2021 is going to be much better. For me, what's really interesting is this, right? So it's definitely higher than it was a year ago. So this is a very good sign. So they have earnings call. Let's see if you click earnings call, it tells you what they, oh, interesting. You can listen to the earnings call. So they had an earnings call. Wow, I didn't even know that. So this is the type of profile who owns P&G. So people who own big companies like Johnson & Johnson, Coke. Okay, so this is my history of what I've done with the P&G. Okay, so this is the basic information that we have. Not a whole lot, okay? So before we go into the trade options, I wanted to show you that you can go to Yahoo Finance, right? And in Yahoo Finance, you put P&G, so I already looked for P&G, and you have a lot of information that is free. You don't even have to pay for it. Okay, so for example, here you can go and look at what a year versus a year ago, how it's doing. So this is on a calendar basis. So here we can see, where it was and what it is. So anyway, but what is it that I look at? I look at things like, I look at these things, fair value, well, this thing says overvalue, but this, I look at the trends. So here, this index is telling me that there is a bullish pattern detected, okay? And the performance outlook 2 weeks to 6 weeks is growing. So it's not saying that it's going to grow necessarily on Monday, but this is good. Maybe long term, not so good, okay? The other thing that I like to look is at the target price. So the target price, the average of all the target prices of all the analysts is 151, and the current price is 128. This is good. I like to see that it's lower. Okay, evidently somebody gave a downgrade, but somebody also had given an upgrade the week before. So, you know, again, not all the analysts agree, but for the most part, you know, the majority think that it's either between a hold and a buy or a buy or strong buy. The ideal is when it's between a buy and a strong buy. Now, these analyst reports are not available, but some. So if you pay for the premium, and you can do that also you can look at some of the reports, right? So I like to look at the more recent reports. So for example, this is a recent report, and in the recent report, let's see if we can find the target price. That's all really that we care about more than anything. Market cap. Well, bullish. So the market says that, oh, here it is. See, $160, and this was very recent, you know. So so I'm glad to see that. The other thing is, I also like to look real quick at the financials. So if I click financials, I will do a lot more research than what I'm showing here, but just giving you some of the most important stuff. So if you look at the financials, you know, it's been growth in the top line. When you look at operated income, you know, a little bit of growth, but then a lot of growth. So they've been doing really well. And I like that they always beat the estimates. So this is really good. So, you know, this is their estimate for the next quarter, okay? Q1, so you see their estimate is 119 versus 117 a year ago. So this is the estimate, okay. So I think the price is gonna go up, so let's go back to our app, okay, and look at the different options of what we can do. So now when I go to trade, I have different options. So let's understand what each of these options are. Okay, I'm gonna put this to the side for a second and explain each one. Now, the main reason why I'm doing this video is because when I read the explanation from Robinhood, you know, I'm a professor. I'm not the most knowledgeable when it comes to finance. That's not my profession. I'm an entrepreneur, and I study finance, but it's not what I do for a living. But as a professor, I know how to be a little bit didactic, so hopefully this will help. So you have this 5 different, call it order types. I don't want to call them options because that's something different that we're going to do in a different video. So the first one is very simple. Market order means that it executes at the current price, and there is a 5% collar. Collar means that if the price of, and I copied this from Robinhood, if the price of the equity, meaning the stock, moves 5% higher than this market that you place the order, it won't execute. So basically, you know, if the current price is $10, right, and it goes to 1060, so 1060 would be technically more than 5%, it would not execute. If it's, you know, 10.45. I don't know if the 5% is exact, but if it's 10.45, provided that there is a buyer, then it does execute. So this would execute, and so let's put the color green when it executes. So at 10.45, it would execute. Okay. Oops. So it would execute. So 10.45 would execute at 11. No. So the reason why it does that is because sometimes, it's trying to fulfill it as fast as possible, and it's difficult to get immediately. So this type of order is when you want as soon as possible to execute the price. So you're happy with this price, you want to place the order and execute it as soon as possible. Maybe it will be 128 plus 5%. If it's less, well, you don't care, right? So this is your regular market order. Basically, you're buying stocks at the market price. Then you have something called limit order. Limit order means that it can only be executed at your specific limit price or better. So it's like you're setting a limit, right? So let's look at the example that they provide. Meow is currently trading at $10. So let's put the yellow at the current price. But you only want to pay $8 at most. So this is what you're willing to pay, to execute. Why? Because maybe you think $10 is too much, or you're looking for an opportunity, to what they call buy on the dip. So that means buy when it's low. So basically, here is, so let's indicate this as if this was the stock price. So if it moves higher, it won't execute. If it moves down, it won't execute. If it reaches 8 or better meaning more favorable because you're buying, then it will execute. Okay, so you're basically putting a limit. The limit is I don't want to buy unless it goes to 8 or better. Okay, I hope this is simple enough. Then you have something called a stop order. Once the price of a stock reaches a specific price, also known as the stop price, okay, then the order becomes a market order. So basically, it becomes a regular order and it executes. So let's look at our example again. Let's say the current price is at $5. But you think it's going to fall lower, right? So it's falling lower. But if it reaches $8, then that's when that's your stop price. Now, why is it $8, okay, and not 6 or 7? Because it says here, you think that it will fall lower, but if now reaches $8, then that means in your mind there is a trend that you say, look, if it reaches $8, then it starts going up. And let's assume that it just keeps going up. Or anyway, this is where you want to buy. So you're here, you think it's going down, but you don't know when it's here if it's still going to go up, but you think that if it reaches a certain level, it will continue going up. So the most important thing is that $8 is the magic number. Okay, so it's at 5. If it goes to 4, nothing happens. If it goes to 6, nothing happens, because you think it's still going to keep going down. You don't want to buy at 6 and then it goes down again. But you think that once it reaches 8, then that's the magic number and it will continue to go up. So this is your stop price or your stop number. Okay, your stop price. Okay. Now, you can do what would be like a combination. So you do what is called a stop limit order. Stop limit order combines a stop order and a limit order. So first, when it gets to the stop price, you know, it doesn't automatically become a market price, meaning buy right away, but it becomes a limit. So let's look at the example to understand this better. And I put it first step and the second step because it's like a two-step process. So the current price is 5, okay? But you want to wait until it goes to 8. So this is again like our stop example, right? Before it does anything. When it reaches 8, you want it to become, you still don't want it to buy immediately. You want it to become a limit. And the limit is you don't want to pay more than $7.95. Okay? So your second magic number is $7.95. Okay? So now all of a sudden is a limit order. So think of it as if, let's say it was at 8, right? So think of this as it's a two-step process, but it's the same thing that when it does the first step, this is like the market price. And you do not want to buy at 9. You want to buy when it goes down to $7.95, okay? Or lower, of course. But it triggers right here. At $7.95 it starts, then that's when it becomes a market order, meaning that it buys at the price, you know, that the market is at. So that's basically your stop limit order. The last example, which is the one that I want to try, and you'll see in a moment why. A trailing stop order lets you track the best price of a stock price, triggering a market order. Investors usually use a trailing stop order to help limit the maximum possible loss. If the stock price moves in an unfavorable direction, the trailing price will stay the same. Okay? Now, let's look at the example because again, the explanation is a little bit. So you want to buy Meow, okay? The current price is at 110. You think that if it goes up by 5%, then it will go even higher. So basically, if it goes to 115.50, which is basically 10%, then that's when you want it. If now goes to a defined amount, then it will go higher. This is when you want it to become a market. So, you know, buy at this price. Now, what happens is, let's say, you know, it's at 110, and it goes to 100. So it keeps going down, it keeps going down, and it keeps going down. And this is basically, you know, the lowest price. Basically, your theory is that at the, sorry, I'm activating again the, let me pause this for a second. So again, if it keeps going down, when it goes 5% higher, then it will trigger a market order, okay? So this is basically saying, look, and that's why it's called trailing, let it track the best price and then trigger a certain percentage above it. Now my issue, you know, 5% seems like too much. So if I look at P&G's changes, you know, the lowest was 126, the highest was 130. So it doesn't fluctuate that much. So 128, if we look at our calculator, 128 divided by 130, This is between the high and the low, minus 1. The difference was 1.5%, so 5% is probably too much. So I'm gonna set the trigger at 2%. So when it goes 2% higher, then I think that it will keep going higher, right? Okay, so this is what I'm gonna do. So I'm gonna put a trade, so this is PNG. I'm gonna put a trade, buy, so I'm not buying options, I'm buying trade. I cannot put the dollars yet because first I have to look for the conditions. So my condition, we didn't talk about the recurring investment. That means that you can schedule so that it invests every so often. Okay. Trailing stop order. So my trail percentage, I want it to be 2%. And the initial stop price, so the initial stop price means if it opens at 128 and it doesn't go down, as soon as it goes to 130, then it executes the order, okay? And you can see the description. Trigger a market buy if it rises above its lowest price by 2%. So the lowest price is 130, then it will trigger at 2% higher. If you know what, I'm gonna put 1%. 2% is too much. Okay, so I'm gonna hit continue. It says if the order doesn't execute, it should expire by Monday 4 p.m. Or I can put it to for 90 days. I'm actually gonna put it, I'm gonna put it for 90 days. I can cancel it later, so I don't mind. Okay, continue. How many shares I'm gonna buy? So I know that the price is 128. So if I want to spend, again, this is a stock that I want to buy, and I really think this is an opportunity. So if I want to spend or invest $1,000 divided by 128, that's 7.8. So I'm gonna put 8. Yeah, so that's just a little bit over $1,000. Review the order, number of shares, percentage. Okay, so if it's 129 and it doesn't go any lower, it will trigger the purchase once it goes 1% higher. If it goes lower, then it will follow, okay, and purchase, and it will make the purchase once it goes 1% higher. So I'm going to, now it says order receive. Because we are on a Saturday, it's not going to execute it now. So your trailing stop order to buy 8 shares is skewed for the market open. Estimated cost, okay, so view order. So here is the order. You skew, so look, you see here on the bottom you have cancel order. So if I change my mind, I can change the order. But I actually like this order. So this is basically the video. I hope you like it. If you do, please hit the like button and subscribe. And you can also have the notifications when I do the next video. This is the first video that I do on this, and if people like it and I see that it has a lot of views, then I'll keep doing them. The next one will basically be the more features on how to trade stocks. Today we cover everything that is buying. It's almost half an hour, so next time it would be selling, and then I plan to do with options, with stock options. So you can see, for example, that I have here, so I bought here a stock option for Apple. So I will explain. So again, I believe that Apple is going to go up. So I bought a call option that expires in a week, and this is how much I paid. So anyway, thank you very much, and I hope you enjoyed this video.